panel session that we're going to come up with. It's a realty market roundup panel discussion moderated by Shashank Jain, partner transaction services and leader real estate deals, PricewaterhouseCoopers. Please give him a big hand. Shashank Jain, may I have you on the stage, please? Along with Shashank, we have Hitesh Ahir, International Monetary Fund, World Bank. He's from the IMF. Hitesh Ahir, on the stage, please. Thank you very much. Please give him a big hand. Mr. Akash Gupta, Managing Partner, Capegis, the most popular man in Bangalore these days, almost a film star. I think he should get a ticket for the Parliament now. May I call our Vice Chairman, Mr. Farooq Mahmood, on the stage. Thank you, Farooq. And then we have, the last but not the least, Mr. K.T. Shandy, partner Ernst & Young. Please give him a big hand as well. So this is going to be a realty market roundup. Very interesting what's really happening in the real estate industry, and we'll have Shashank moderating it. Shashank, would you like to come onto the podium?
Good evening, everyone. We do realize that we are running awfully late, and we also do realize that we possibly are the only ones holding you up for all the networking and good stuff that's lined up for the evening. So we're going to try and make it real quick. What we're going to talk about, and I guess before that, I would possibly take a minute as my duty as the moderator to spend a few more seconds on the august panelists that we have. Starting with Hitesh, he works with the Global Research Department of International Monetary Fund, and he's been focusing on housing markets and forecast assessments across the globe. Around 60 countries is what he's tracking. He's currently a project coordinator for the Global Housing Watch, which is a very interesting project where he's tracking 60 countries, over 60 countries, and looking at the pricing trends and the reasons thereof, etc., etc. He's flown in specially from Washington, D.C. To sort of participate in this. On the extreme side is my friend Chandy. He's a tax partner, tax and regulatory partner in Ernst & Young EY, based out of Bangalore. The man to go to if you have any tax problems in Bangalore as well as Kochi market, right? Then we have in the middle Akash. Akash has been in investment banking, capital markets, capital raising, M&A, debt advisory kind of work for the last 20 years. He's worked on over 150, that's incredible, 150 debt advisory, debt raising transactions in real estate. Spent a good amount of life in the US, in the thick of action in Wall Street, worked in Singapore. Also ran a couple of tech and e-commerce companies. He's an MBA from Columbia University, currently based out of Bangalore. And I'm not introducing Farooq. So what we're going to talk about is, since we are a bunch of, as you would have noticed, a bunch of advisors, consultants, etc., giving you a more outside-in view of the topic that we're going to talk about. Can Bangalore be a preferred investment destination for real estate? Talking about investment destination, I was reminded very recently, during my grown-up years, my father used to tell me, beta, earn enough money so that you can buy a house towards the end of your career. Now I tell my son that buy a house to earn enough money. So that's the full circle that we've gone, where we are looking at real estate as an portfolio, as an investment option, in addition to a lot of other things. The other aspect of this, this topic we're talking about is Bangalore as a market. And I do want to, before I say this line, I do want to make a disclosure that I am from Delhi, North India. So whatever I'm going to say, don't hold me against it. And in some ways, I'm also colored. What we've seen with a lot of global investors, a very interesting way where they have sort of bucketed the various micro markets in India. And the theme that we often hear is that in India, as you go from south to north, move from down to up, the transparency levels actually go down the other way around. So that way, talking about Bangalore as a preferred market, I think should be an easy stuff. We're going to talk about what it takes to get investment and funding into the market, what kind of sort of global trends. Razak Saab in the morning alluded to about 80,000 jobs getting created every year in Bangalore. Honorable Chief Minister talked about 2 investment corridors coming up from Bangalore, industrial policy for Karnataka, more importantly, reducing and simplifying the approval process. People talked about professionalism, transparency, improvement in governance standards, etc. So I guess we will sort of have an interactive discussion. Time permitting, we possibly have another 5 odd minutes for a quick Q&A for the larger audience. And I'll sort of kickstart the question answers. I would like to start with Hitesh, taking benefit of his exposure and his understanding of various markets. So Hitesh, why don't you tell us what's happening in the global market, especially after the global crisis, while it's been a few years, and different markets would have behaved differently. So what have you seen at the world level?
So basically, the IMF, we are tracking house prices for about 60 plus countries. If we take the average for those 60 countries, we see that in the past 2 years, the house prices are recovering. But beneath that, a simple average, you have a set of countries that are rebounded and a set of countries that are recovering.
Would you spend half a minute explaining the concept of rebounding and recovery for the audience, and how you've bucketed various countries into that, and where does sort of India fall into?
So basically, you have a simple average where, for the past 2 years, the house prices are recovering. So if you drill down the data a bit more, you see since 2007 and 2007, 2 set of countries. One set of countries that, after the crisis, the prices dropped a little bit and they just rebounded quickly. And another set of countries that had a sharper drop in prices, and they are, slowly recovering. And within this group, we have a set of advanced economies in the rebounded, and another set of in recovering. Similar thing for emerging markets, a set of rebounded and another set in recovering. In terms of India, it's in the rebounded group. We see prices have been rising for the last year. Real house prices in India have been rising around 8.5%. So one thing that we have seen is that house prices in India have been rising, but at the same time there is a puzzle. No, we see a lot of reports from Knight Frank, Prop Tiger, that there is a lot of property hangover. So there is a lot of property hangover, but somehow the property price is rising.
So as always, India is sort of defeating the world trends. Farooq, I would want to take this opportunity and ask you, while Hitesh talked about countries either who've sort of come into rebound category where the prices have shot up, or in recovery category where the prices are recovering. Talking about India and talking about Bangalore, where would you bucket Bangalore as a market? Do you think it's a recovering category, or do you think it's vibrant and rebound category as of now?
Good question. It's a way that you see things, the glass half full or the glass half empty. I would say Bangalore is one of the better markets or the best market in India, the way it is right now. This quality space, I don't see any problems in the Bangalore market. Bangalore market seems to be very vibrant, top quality construction, value for money. And as I was quoted yesterday, or I think it was day before yesterday in the Times of India, Bangalore is the best market in India to be in. And
But tell me, what Hitesh mentioned is somehow directionally true, that while the prices have been rising at about 8 to 10% year on year, so is the unsold inventory or the stock or the inventory overhang that we talk about. So how do you sort of balance these two out when there is a lot of inventory in the market? Why would the prices rise? And we have Governor Rajan saying, going on record, that it's high time that the developers actually should drop the prices.
again, the matter of inventory is very different.
Sorry, I notice Farooq struggling for words on this one, right?
No. Inventory is in three forms. One is on the drawing board, one is under construction, and one is when the lights are on. And in Bangalore, you have no buildings with lights on. It's either on the drawing board or it's under construction. So there is no excessive inventory that is left unsold. Second question that you asked me about the RBI governor, I beg to differ with him, and I made this statement earlier also. What in India has come down? The cost of price, the cost of sand, cement, steel, most important, labor. And he forgets that 42%, 42% comes to his pocket directly and indirectly by way of taxes. Now, if the government can look at knocking off the taxes and providing homes for the homeless without saying that, you know, the developers are making money, I think the government is a major partner here. They're taking away 42%. I don't think any developer makes 42% on a project or 40% on a project. Direct and indirect taxes take away 40 to 42%. So, in my view, prices are not going to come down. It's going to go only upwards in the Bangalore market because it's a quality market. The developers are outdoing themselves, one trying to outdo the other. You've seen stalls outside there. Somebody saying, I have a pool, and somebody says, I have a pool, covered pool and a heated pool, and I've got a gym, and I've got a sauna, and I've got everything and more. So each developer is trying to outdo each other here. So the quality of construction's one of the best in India, I would say.
Akash, possibly moving on to you from the cues that Farooq is giving. We're talking about no inventory with lights on being there, as Farooq has beautifully put it. So, which makes the job of all the people sitting here, as realtors, agents, brokers, etc., interesting as well as challenging, right? And we've seen the developers being sort of flushed with funds in some ways. There's a lot of institutional money that they get, right? But we haven't seen a lot of institutional money, private equity money, debt investments, etc., going into the realtors ecosystem, right? It's largely been around developers, but realtors sitting out here are an important stakeholder. But we haven't seen institutional money funding going into this set of the stakeholders. Your thoughts on why it hasn't happened, and what would it take to make it happen?
The realtor market tends to be fairly fragmented in India. It's a lot of 1, 2, 3, 4, 5 people shops which operate across India. There are some organized shops like NetAmbit, Investor Clinic, now Square Yards is there as well. But all of them struggle to get institutional capital simply because of the fact that it is a people-centric business. So if the person leaves, the business goes with him. That's a fact of life. And institutional investors worry about people-centric businesses. They want to invest in platform-centric businesses, where even if people were to leave, the platform is there which keeps running the business. So there is a big, big differential in that. Fact of life is this business is a consultative approach business. It's a bespoke business. People need personalized attention, and hence, generally speaking, people tend to shy away from investing in these businesses because they are looking to make a return on their capital. So hence, these kind of businesses historically have not attracted money. Now, should this business get more organized, certainly there can be pool of capital that can chase these businesses.
Talking about the business models for realtors, and you've outlaid what are the challenges in terms of they tapping into institutional money. Um, Jandy, maybe if I can move on to you, uh, we all know, and sorry to be a little pricky on this, taxes seem to be absolutely painful thing, right? But yet essential in the ecosystem. But we've seen a lot of progressive steps being taken by the government on the tax and regulatory front. There are certain newer concepts, regulations, etc. coming in. We've talked about the regulatory bill in the morning. We have REIT, you want to talk about tomorrow about it. But I mean, sitting where you are sitting, do you see tax and regulatory aspects as an enabler to grow business for the realtors, or it will continue to be a pain point?
So tax and regulatory is going to remain. Whether it continues to be a pain point in that will credits be allowed across the system, all of that is, the government is looking at ways to ease things. You hear of all the new things that the government is doing on GST, etc. But at this point, I want to, sort of stress on the, some of the points that were made. Today, what makes Bangalore vibrant? The vibrancy comes from the number of projects launched, the number of high quality players in on all sides, advisors, realtors, developers. So there is a huge market there. But what is a bit of a stumbling block is the availability of good capital, of good investments. Now I want to touch upon there on this real estate investment trust. Which is a platform that has gained significant traction in the US and Singapore. So for example, statistics show that in 2014, 70% of all IPO money in the real estate sector came through REITs and not through a general IPO. What this allows everyone to do, and all of us know, when more money comes in, there is more velocity, there is more business for everybody connected with the industry. Therefore, the government's push on getting the real estate investment trust notified, and it's 1 year now, is going to go a long way in helping developers, deleverage their balance sheets, getting developers together to deleverage their balance sheets, and getting all of us, advisors, realtors, working in that process and participating in that, in that upward tick.
Again, coming back to the same thing, you talked about why is it hard for the realtors to sort of raise money. But we're seeing a new wave of realtors, all the internet sites, the makan.com, the housing.com, etc. They are even, without doing possibly any business or getting any market share, they've got obnoxious valuations, if I may. Right? So how is it that those realtors or brokers are able to sort of tap such large amount of funds and not our fellow colleagues sitting here who've sort of sweat it out, learned the hard way, done the brick and mortar way?
See, let's talk about housing.com. I think that's been widely covered in this press. The reason housing.com was special is because what they did was they put transparency in front of the customer. They said a broker or a middleman cannot hold on to the information in terms of where the apartment is for rental, how it looks like, vice versa. They put everything in terms of pictures, location, map, everything on the site. So that's where the person's business or the broker's business began, wherein it became a value-based selling as opposed to just information arbitrage. So by and large, in the next 5 to 7 years, you'll see information arbitrage go away. You'll see more value-based selling come into the business, essentially. That's one. Whenever that happens, the platform businesses always win, because you take common floor, housing, Makan, 99 acres. These are essentially lead generation businesses now. They give leads to, realtors, brokers, everybody essentially, because they don't get involved in the last conversion cycle. They give you leads. And hence those platforms are theoretically very valuable, because you're going there for leads. It's not a person you're talking to, it's a platform you're talking to. And hence that can increase in value. It's not a person-centric business essentially.
Farooq, is that a real competition that you see for the realtors, the way they're doing business?
How many people do you see in this room? Hall full.
Yeah,
This is a big world. There's plenty for everybody here. So they're not competition. They add value to our business, and we don't see it as a threat. We see it as a way to improve ourselves and make sure that we give better service. A .com is a .com. You come to me and I give you service that you'll never go away for life. I'll know you, I'll know your kids and your grandkids. They'll never forget me because I'm the guy who sold them their home, or the father or the grandfather left. And he'll remember me because I wanted to share an anecdote with you of what happened to me. 20 years ago, 22 years ago, there was a client, a lady who came from Mumbai, then known as Bombay, I guess. And she said, I have 6 lakhs with me and I need to buy a home in Bombay, in Bangalore. I've just sold a flat in Bombay, and I need to reinvest in Bangalore. So I got her a home for 2.5 lakhs. I invested the balance money in a commercial rent-yielding store, which gave her about 8% yield at that point in time. She was sitting in my office and I got a call from the principal of a school. She's just moved in. So she said to me after the conversation, I've been running after the school for the past 2 weeks and I haven't got an interview with a principal. Can you help me do that? I just picked up the phone and I said, so-and-so is coming to meet you. So the lady went and met her. She got the seat for her kid. Today the kid is a doctor and she is working in a hospital in Dubai. And my kids can forget my birthday, but that kid, first thing in the morning, I get a message on my SMS on my phone saying happy birthday. This a .com can never give you. This is personal service that my friend sitting here can give this to you. And I can tell you this, each and every one of them sitting here will have a heart-rending story to share with you. You can write volumes about the customer relationship that they have built over the years, over the decades, which has made this NAR family the strongest brand ever created as far as the broking is concerned. So they're here to stay, we're here to stay. There's plenty of space for us to do business, and I don't see them as a threat, and I don't think they see us as a threat. We're here and we'll continue to be here.
Very good. On this high note, I'll take this opportunity to see if any of the colleagues here have any questions for the panelists, from tax to markets to global fundraising, structured debt, anything, any questions? If you could introduce yourself.
Yeah,
and then.
good evening, I'm Sudhakar from Kriya Chennai, the Chennai Association. My question is for Hitesh, we keep hearing that the US market is going to crash in another 2 months or so because only on paper it has been building up. So if you can throw some light on that, should be.
We see the U.S. housing market recovering. We don't see any issue at this time. But one thing that I should point you out, and also all the participants, the IMF does an economic report for each country once a year. As a member, you have to go through this economic health checkup, and all the talks, all the analysis is put together in a report, and those reports are available to the public. And so I have not read the latest report on the U.S., but I welcome you to go to the IMF.org website, and if you click on country and select United States, you'll see all the analysis on the U.S. housing market.
I'm Rakesh from 7 Business Ventures. A small question on the financial part. Effect of GST on the real estate industry.
So, we have to see the rules and regulations. GST is still work in progress, but the concept of GST is that credit will be given across taxes. That being the case, and today there being tax on VAT on real estate development, service tax on real estate sales, etc. GST can only improve the situation where there is credit across the system. And that's the concept of GST, that you get credits and therefore prices will, because multiplicity of taxes are not levied, prices will come down. So GST can only be a good thing.
As Mr. Farooq is talking, around 40-42% of the taxes. So will it really benefit the customer and the developer?
It should, because as we have seen, most developers that we work with, and we work with quite a few, want to turn over the inventory fast. They don't have the intention of sitting in one property and, continuing that for 5 years. And price plays a part. Everyone has a profit margin to make. Everybody, all service providers. And therefore, as the tax comes down, you will definitely see some price advantages being passed on to the consumer. Thank you.
Maybe
Hello.
we just have time for one or two questions.
Yeah.
Sure.
I just want to clarify a point which was raised. Online portals are not realtors. They're a different model of business. Realtors are real estate agents, brokers, and the terminology realtor is actually a trademark that belongs to the National Association of Realtors, United States of America. You have to be a member of it to use the term realtor. And the National Association of Realtors India has a bilateral agreement with the National Association of Realtors USA, which has over 2 million members. And we have an agreement with them, so our members can do business with their members. That's why most people don't know the difference between a realtor, a developer, a builder. So I wanted, most of this audience here I'm sure is educated, but I just wanted to highlight this point to say online portals are not realtors. They're a different module of business.
Great, thanks for the clarification.
Just clarification on that. I think online portals are enablers to closing sale. They cannot close sales on their own. They just cannot. Because it is a consultative approach business. It needs personal touch. So they can actually only increase your business, not decrease your business. And it can actually help you do business across different cities, which was not possible previously.
Sir, my question to Mr. Farooq. So far in India, we've been charging 1%, 2% commission to our customers. And now we are being regulated, more and more responsibility coming to us. Can we see in a future charging commission like in USA 5.5% or something like that? Sir, I am Sadbir Sahni from Gagandhi Properties, and I am a ACRI member associated with the NR India continuously. And so it's a commendable job done by all of you that we are sitting here together discussing all this.
Thank you, sir. I know you from Delhi. I'm only saying one thing here. Commission is something that you get when you service a client. It can be 1%, it can be 2%, it can be even 10%. I saw a signage there in a store, in one of the stalls saying 10% brokerage. Now, you've got to read the fine print, you've got to see everything, you've got to decide. Don't worry about the government will take care of itself. You worry about yourself, doing business, more commission, customer satisfaction generates you more money. Don't worry about it.
I'll raise another question, and maybe at the cost of critiquing some of the things, just to sort of bring things in perspective. Another thing that we've very often heard, talking about Bangalore being a preferred destination, people tend to give credit to IT companies, to the e-commerce boom, to the enabling environment, in the city around this, which makes it a preferred investment destination. Somewhere, at least, our outside-in view has been that a fair share of credit hasn't gone to the important stakeholders who are sitting here. So what can be done differently by this stakeholder team to be more meaningful and get the credit of making Bangalore a preferred destination?
The reason they're sitting here is because Bangalore is already a preferred destination, and they've done business here, they've grown here, they've grown their businesses here, and you'll see them all successful realtors here. So, and they're growing by the day, so I don't see that. And the most important factor is the human factor. We've spoken about the weather, we've spoken about the economy here, we've spoken about the IT, we've spoken about this being the garden city, but you haven't mentioned that one of the finest human beings in this country come from down south and from this city of mine, Bangalore.
All right, I think we're running out of time. If there are any questions, we can take one or two and then we'll wrap it up. Yeah, can we have the mic, please?
So let's keep this as the last question if you guys don't mind. Thank you very much.
Good evening, sir. Myself Ismail from Global Enterprises, member of PRI. This question is, the FDIs are not coming to Bangalore. What is the reason why they are not coming in? Is it because of the taxes? We have up to 40% taxes. That is the reason, or what is the reason these FDIs are not coming in investing in Bangalore?
If you could repeat, FDI you said?
Yeah, foreign investors.
Foreign investors are
Yeah,
not
foreign direct investments.
Akash, you want to take that up?
No, listen, FDI investment is happening at a record pace, especially in last post-Modi government. Now, FDI is coming in specific subsets of real estate sector, for sure in commercial assets, because the pricing and the yield is a lot more sane compared to housing. The FDI will happen more in residential as the tax laws are simplified. But that said, you're seeing, I can tell you in last 6 to 9 months, we have seen multiple platform-centric deals, wherein large PE funds have partnered with large developers and floated joint ventures to fund 8, 10, 12 different residential assets. And I think this is just the start of things, it's not the end of things. Something which has completely stopped is started again. So you'll see a lot more of this essentially.
I can add
Thank you very much, ladies and gentlemen.
Just one point I'll add on to it, just to clarify you. I come from the real estate deals practice, and I can assure you, in the last 1 year, 1.5 years, Bangalore has got the maximum investment. It may not necessarily, as Akash said, be in the form of equity, but definitely foreign debt has found favors in Bangalore, and Bangalore has been one of the most active market from an investment point of view.
I'd just like to add and close on this. Blackstone has JV with the local developer, and the largest funding has come in internationally on that FDI from Bangalore itself. So it's one of the largest markets for FDI. The Qatar funds are here. You've got one more fund from Luxembourg here. You've got a Saudi group looking today. You've seen all these investors here. They've not come to see us and say hello to us. They want to see how best they can bring in money here to invest here. So I would urge you to go meet them, shake hands with them, exchange your cards with them, network and do business, whether it's Bangalore, Mumbai, Delhi, Calcutta, or any of the cities. Go meet them and let's do business.
Thank you very much, ladies and gentlemen. Please be seated. I will be requesting some of our colleagues to come in and give mementos to each one of you. So may I have Jude, Alex and Bharat Bhai come up and give the memento firstly to Shashank Jain. Jude, Alex and Bharat Bhai. Can we have all of you up quickly, please? Thank you. Can I have DK Suresh and Rajesh Gadgil please come up and give a presentation to Hitesh Ahir. Please give a round of applause. Okay, I don't think they're here. May I have Kaushalya Sahal and Apurva Shah come up and give it to Mr. Hitesh Ahir. May I have Mr. Rojinder Kotkar and Thomas from Kerala to please give a memento to Akash Gupta, please. Please give all of them a big hand. May we have Thakur Mulani and Praveen Fanse Ajit Sagar, please come. And if you have Shalinder Jain, he could also come and give the memento. Thank you very much. This is to KT Shandy and to Farooq Muhammad. Mr. Mahmood, you can take one and then you can give it back to us if you want. We want to keep giving you mementos. Thank you very much.